The U.S. equity market is ready for a leap higher, and the agribusiness of the market could soon explode higher as well. That's what the charts are telling our next guest. Joining us from New York is J.C. Parets, founder and president of Eagle Bay Capital. He's also editor of allstarcharts.com. JC, let's start with this agribusiness look. You like long bases. There's one being put in here, and we've got that old saying, the longer the base, the bigger the bounce. Let's talk about what you're seeing on the charts in this sector.
Yeah, I love them, Francis. I really do. We've been really patient with the agribusiness space. I mean, truthfully, I came into the year thinking it was going to be our first big position of the quarter. And I was wrong. Fortunately, we've been patient, but, I think it's really, time to start piling in, after last week's breakout. First of all, look at it relative to the S&P 500. As you know, we like to incorporate a top-down approach, bird's eye view, really get a big picture look. And on a relative basis compared to the S&P, there you go, you see the chart there, we're where we bottomed out in early 2008 and went on to outperform the S&P 500 over the next 3 years. So we're at those same levels now, putting in a nice little bottom. So I really like that a lot. And then when you look at it on an absolute basis, we've gone nowhere in 3 years. And, although that might be frustrating for those involved, in that space, we look at it now, and I think we can get a fresh start. I think that we're off to the races. I think we can see a 20% rally in the agribusiness space, particularly the Market Vectors Agribusiness Index. And there's an exchange-traded fund, MOO, M-O-O, cleverly named, that I think that you could take advantage of that, as well as some of the components. And more importantly, from a risk management standpoint, I know you and I always emphasize that, we only want to be in this as long as we're above the highs from the past several years. So, the risk is very well defined. Love that.
It's not just cows in moo. We got Tyson Foods, which I think is as well known for chicken as it is for its other meats. That's one of the leaders in the sector.
Yeah, no doubt about it, especially from a structural standpoint. At this point, we're looking a little bit more tactical, a little bit more short term. But if you want to take a step back and look at that base, look, that's a weekly chart. Nice consolidation. Those sort of patterns tend to resolve themselves in the direction of the underlying trend, which obviously is to the upside there. So that's something that we want to be, looking at very closely and buying a breakout upon an upside resolution in Tyson Foods. Absolutely.
There's a lot of fertilizer. There are at least two companies fertilizer-oriented in moo, Agrium and Potash. Potash is weak. Agrium is strong. Tell us, we'll start with Agrium.
Yep. So the agribusiness sector, in order to be in that index, you need to generate more than 50% of your revenues from some sort of agribusiness, whether it be in the fertilizers or in some of the chemicals or, some of the food products and whatnot. Potash, that thing's a mess, really solid downtrend. It's not really anything we want to bother with. But look at Agrium, kind of the complete opposite, really one of the leaders in the group. And, from a tactical perspective, that one looks good. I think we're headed probably up towards 117 on the Agrium.
So that looks, the moo looks good, especially if it continues to be above its levels here. Let's talk about the broader market, because I saw a post from you maybe a couple of weeks ago. You had looked through all your graphs and all your charts, and you said that many of the global markets had kind of reached your calculated targets. And we're at new highs, the S&P 500 essentially at new highs. What moves us? Do you think there's more upside generally in the S&P 500? We'll focus on that index.
Yeah, Francis, we've been really neutral, really since the end of March. In a lot of in the S&P and a lot of the major U.S. averages, a lot of upside targets were hit. And then to your point, yeah, sure, throughout April, globally, a lot of our targets were hit. China, Japan, Malaysia, Hong Kong, Philippines, across the board. That was really a common theme, particularly in Asia, which is, more reason to be neutral over the last couple of months. But I got to tell you, we're in the S&P 500 specifically, and we could touch on that for a minute. We've gone nowhere, and it's been a very frustrating market for many participants. As you know, I talked to a lot of people, a lot of people getting whipped around the last couple of months, and, it's really unfortunate. But, if we've been patient, I think we can buy an upside resolution to this. Again, like what we're talking about in Tyson, these sort of patterns tend to resolve themselves in the direction of the underlying trend. In the S&P 500, obviously, that's higher. So, that's really what we're looking for. We keep bumping up against this level. I got to tell you, I think that the resolution out of this is going to be to the upside, and we probably want to be buyers of that.
We've knocked 3 times, I think, at least on those new high levels. Who's going to lead us? I think you say consumer staples and tech.
Yeah, when you look at a lot of the indexes, you look at energy, for example. Last time I was on, about a month and a half ago, I loved energy. We got that mean reversion already. So to be piling on in that sector at this point, I think you probably missed it. It's a little late from a risk-reward standpoint. So when you talk about leadership, I mean, staples look good. Technology looks great. Those two in particular really stand out in terms of, where I think the leadership can be, not necessarily utilities. Healthcare made its move already. I really don't, not a fan of that. Materials, sure, can they do well? Possibly, but they represent such a small percent of the S&P that, they could double. It's not going to matter. So I think staples and tech, I mean, financials, another mess, serial underperformers. So, I think tech and staples, probably look the best of the group.
And just finally, you did a pretty good counter-trend trade on my dollar, the Canadian dollar. It's still higher off the lows. The U.S. dollar, though, looking sick again today.
Yeah, Francis, I told you in March, I mean, we hit extreme bullish levels that we have never seen before in history. So, I mean, fading dollars in March, in my opinion, was a no-brainer. And, these sentiment unwinds, they're very powerful, Francis. So, I don't think it's over. I think there's definitely more downside pressure to come. I still think Canadian dollars have room to the upside. I think we could probably get up to the high 80s, in CAD. I love it, and I think of you every time we're buying Canadian dollar futures. I'm like, Francis would be proud of me.
I am proud, JC. I'm going to leave it there. Thanks very much for your time today. Always good to see you.
Thanks for having me.
JC Parets, Eagle Bay Capital and AllStarCharts.com.